Sarat, but before we go into that, let's talk about Apple. How much does, maybe not, does Apple mean to the macro market?
So break it down in two ways, Brian. Apple means a lot to the market. If you're invested in the market, if you're in an index fund or an ETF that mimics the S&P, you have a big exposure here. And actually, a lot of funds are overweight Apple. So in this way, you're seeing when the market comes down and Apple comes down with it, even more than it's pulling down the market. We had this happen with the big boys, the FANGs, a year ago. They've all lost a lot of their muster. I mean, Microsoft's still about 4.5%. But Apple is the bellwether, and if you see money coming out of it as you do now, people are either going to use it for a source of funds or they just need to, come out of the market.
So here's my hot take, Sarat, which is this is poor Apple. This isn't about their business model. This isn't about this isn't about any of it. It's not about Apple. It's not about Meta. It's not about Amazon. It's not. $12 trillion has come out of the stock and crypto space, Sarat, over the past 12 months. It's no individual stock's fault, is it? It's just a Fed story. They injected huge liquidity along with the federal government. Now they're throwing that process into reverse. That's it. That's the whole story, isn't it?
I think that's a big part of it, but it's not the only part of it. I think it's also when you talk about interest rates, and that's the part. When the Fed put all the money in, yes, all the go-go momentum stocks took off. But now what people are looking at, and you guys were talking about at the top of the hour, it's where is the growth going to come from? And if people are a little bit scared that, hey, Apple might not be the same company it was 2, 3, 4 years ago, couple that with the interest rates, you're going to get money coming out of a stock that's 6%. That has been a winner for everybody. So if you're looking at your portfolio and you're saying, wow, this thing is becoming a really outsized position. I have losers on one side. I can offset them against gains. Where am I going to get my gains? Well, I can downside Apple. And now, guess what? There are other opportunities in the market as well. I don't just necessarily have to be in momentum growth stocks and technology.
All right, so let's talk about where we should be. What we're going to do the rest of this week, I think, Sarat, is find some opportunity. And you brought some cool new names for us, as you normally do. We all want to smell nice, right? Or we want other things to smell nice, like the streets of Manhattan to smell nice. Smells like cannabis. But Sarat, international flavors and fragrances down 30%. They make everything smell better, including perhaps our portfolio next year.
Yeah, it's not a household name. They bought DuPont Biosciences. They merged the two companies. They are the ingredients that go into perfumes. They're the ingredients that go into your food, and even into pharma. So they're like the area that will grow with the areas that we think will do well when the economy is slowing. It's a company that trades at a market multiple. What they're doing is they're deleveraging, and they're spinning off different divisions that aren't going to be adding value to the core of the business. And we think this is kind of one of these unloved, it's not sexy, but it's a cash flow company that's going to pay down debt. It's doing its own LBO. It's got a 3% dividend yield. And guess what? It is providing essentials to people that want to go out and buy products and buy food and pharma.
The other pick we didn't have time to get to is GE, old General Electric. We got international flavors and fragrances and a little GE. Sarat Sethi, thank you, my man. Appreciate it. We'll see you soon.